Hi, my name is Sunil Fernandez. I'm the managing editor for Goodreturns.in, India's leading personal finance portal. I'm here to speak to you on one stock that you can buy for the long term. So investors who are looking to buy into stocks can look at one stock that we recommend, and that is the Tata Steel. Now, before we recommend the stock of Tata Steel, do remember to watch the video until the end because there is a disclaimer as well. So let's begin with why we believe stock of Tata Steel is a good share to buy at the current levels. The first is the PE ratio of Tata Steel. The price to earning ratio of Tata Steel is 4.28 times. So it's very cheap. But of course, having said that, a lot of the performance quarterly numbers going ahead will depend on steel prices. So what looks cheaper at 4.28 times may not necessarily be the case. Were steel prices to fall, profitability could be affected, leading to an impact on EPS and PE multiples. So really, it all depends on steel prices, which makes at the moment Tata Steel extremely cheap. Looking at the second point on why we are recommending the Tata Steel stock is because it has got a dividend of 51 rupees per share. The dividend yield on the stock itself is more than 4.5%, which is one of the other reasons we are recommending the stock. So if you buy the stock now, you will get a 51 rupees dividend. The stock goes ex-dividend on June 15th, which means you must buy the stock by close of trading hours on June 14th. So that one of the reasons we are recommending investors to buy the stock of Tata Steel because of its dividend of 51 rupees per share. The third reason to be buying the stock of Tata Steel is that the company is repaying debt. It is paying back a whole lot of its debt. The free cash flow from the company's operations has been used to pay back debt. In fact, the company last year in 21-22 had a free cash flow of almost 27,000 crores. That has been used to repay debt. We believe that even in this year, 22-23, with steel prices still at elevated levels, the company could do well, cash flows could be good, which will result in a further reduction in debt. So that we believe the third reason to buy the Tata Steel stock is the reduction in debt. The fourth reason to buy the Tata Steel stock is the stock split. The stock is being split in the proportion of 10:1, which means if the stock is trading at 1,050 today, the stock will trade at 105 post the stock split. Now, what happens is when there is a stock split is the stock, instead of trading at 1,050, will trade at 105. There is better liquidity in the stock and more retail investors will invest, especially those who are looking to invest in at lower levels and who can't afford a price of 1,050 can easily buy the stock at 105 post the stock split. So these are some of the reasons we believe that the stock of Tata Steel is an excellent buy. Having said that, we once again reiterate profitability could be impacted if steel prices fall. Having said that, we still do not believe that there will be a crash in steel prices for many reasons. Your supplies from Europe are stuck because of the Ukraine war. Demand is robust in India because of the economic growth. Construction and real estate is booming. Automobile sales are picking up, so which means steel demand will remain, especially domestically. So we believe it will not, the prices are not going to come down anytime soon, and in 22-23 Tata Steel might have a good year. So we believe that the stock can move higher from these levels. Now let's do a quick disclaimer before we end the video, and that is to tell you investing in stocks is risky. Remember, you could lose money, and therefore neither myself nor our company Granium Information Technologies would be responsible for any losses incurred by taking a decision based on this video. Thank you for watching. Do subscribe to our channel and we'll come up with more stock related videos for our viewers. Thank you for watching.